In this video, we're going to take a look at double tops and double bottoms. And as it sounds like, a double top is 2 times hitting the top, or a double bottom is 2 times hitting the bottom. Simply a price that the market can't get through in either direction. Sometimes you'll hear them referred to as M and W patterns. They're very prominent and important signals once you get them. They don't have to be to the point. Doesn't have to be the exact same price, but you want them close. They are reversal signals. This is a bearish reversal signal showing that we can't get above this level here, and this is bullish. So looking at the chart, you can see clearly that we had been breaking down, and there's 2 areas here on Johnson & Johnson on the daily chart, right around, I'd say around 110, 111. The market can't break above, and that's a good sign that the buyers are going to take over again. You can play this a couple different ways. This is that W that I had mentioned previously. Some people will wait for a break of the W. Now, that's an extraordinarily cautious way to play, but the idea is you can extrapolate. This is 111 to 120. That's a $9 move, so you're looking to hit 129, and that's exactly where we go to right off the bat. However, I prefer to play it as such. I see the double bottom, and as soon as I see us break what would be the middle of the W, I go long there. I still wait to see if we break out above there, and once we do, I still extrapolate the same move as if I had gone long on a break of the W. This gives you, in this case, an extra, say, $3 or $4 on the trade, which can make quite a bit of difference. On 100 shares, $300 or $400, or 1,000, $3,000 or $4,000, that type of thing. So that is an example of a double bottom. Over here, we have a double top, and it works the same way. You can see that clearly in Wayfair on the daily chart, we could not get above $150. I like this trade a lot because 150 is such an important psychologically large number. You can see that we do have the M pattern here. And right at the 130 level, you would have broken the bottom of that M pattern. So you're looking for a move down to 110 because it is $20. Now, this particular M pattern, there is no early entry because the bottom comes all the way down. So unlike the other one, which flipped over as an M, would have looked probably more like this, and you could have entered there. You actually had to wait till there. But it's a nice, easy move. It's $20. It's very obvious. Once you short it, you put your stop somewhere in about the middle of it, because either it works or it doesn't. And then once you get some profit, you can lock your position down to a break-even scenario. You hit your target. Very easy. Obviously, these are very important signals. Higher time frames mean more than shorter time frames. Keep that in mind. That's true with almost everything technical analysis related anyways. And it is a very profitable way to trade when you get these signals, because they don't happen all the time, especially when they are at such obvious large figures like $150.